Hey guys, Stock Saturday, and I got a bit of a cold, so this won't be a super long video, but I thought I would get one out at least. I am down 1.2%, about 19,000, nothing sort of too much, slightly worse than the market. The market is up 0.85%, and the Nasdaq is doing a bit better than that, 1.82%. So, yeah, one or two things have sort of gave me a little bit of a knock on the crypto side a little bit. Still, sort of a little bit unhappy. Some of my sort of other stocks are not doing quite so well. But yeah, that's just market fluctuations. I think I don't exactly have a very similar to the market portfolio, I suppose. And yeah, I sort of think I outperformed last week and sort of will flit around week to week, but shouldn't really focus on week to week. We should look at more longer term performance, which I suppose I will start to do now that the portfolio is a little bit more sort of main stock focused. So I could take a look at a couple of the earnings from sort of some of my larger holdings, as I would normally do, but I think there is a little bit of an elephant in the room, in sort of that, we've got Applied Materials now as my largest holding, with sort of KGHM following close second, and then Fresnillo and sort of Kerr Mining. Amazon now fifth. This is not due to any trades at all. I haven't done much of anything sort of in the past couple of weeks, really. This is just market fluctuations. But yeah, 43,000. And if I take the Equinox holding plus the options, which have grown a reasonable amount over the last few weeks, I'm now sitting at 181,000 for Equinox. So yeah, Equinox is currently my largest holding by over 4 times as much as anything else, which is a hell of a lot. So I thought, let's sort of dive into why I'm sort of still holding, why I'm taking profits on any of these options yet. You can sort of see in the Interactive Brokers account, they are now sitting at 600% in the green, which I'm very happy about. I sort of keep mentioning it wasn't so long ago now, a few months ago I think, that they were in the red. So yeah, 600% is quite a surprise. I thought I would adapt one of my Bitcoin miner spreadsheets sort of into gold mining. The format sort of works reasonably well. I think of Bitcoin and gold both as commodities, and so sort of modeling the known cost of sales and things, exploration, stock-based compensation, general admin and stuff, in theory would stay the same regardless of gold price, and the mined ounces should sort of stay roughly the same. You just got to get a reasonable idea for what they are going to produce. So yeah, I've gone for these figures. The sort of current gold price of 4,250, with their, I'm calling this annualized after their newest mine sort of gets fully ramped up, which is the Valentine mine. I've sort of taken off their most recent earnings, and they're looking at sort of 233,000 ounces before Valentine has started up, which is, I believe it started up sort of just in October, and they have actually come out with news that they've hit, they call it almost nameplate capacity, which isn't, 100% of what they expect to mine, but that is a hell of a lot faster than the Greenstone mine achieved that. So Greenstone, they have sort of walked down their annual production target from what they originally had, and it took sort of multiple quarters to get even close to what they think. Whereas with Valentine, they're essentially saying that they've got there in, a month and a half. So I think we could reasonably say quarter 4 is going to be sort of, okay for Valentine. I think they're saying towards the upper end of 15 to 30,000 ounces, which they initially said. They've sort of said it's a 190,000 ounce per year mine. So, if they've done sort of 25,000 this quarter, it literally just started this quarter. Yeah, could be looking at sort of 40 to 45,000 per quarter next year. So I feel reasonably confident in sort of, taking, even if you just took the 233,000 multiplied by 4 quarters plus 180,000, it sort of gives you 1.112 million ounces. But they are still making improvements to greenstone, incrementally. It started quite a while ago, and they are sort of, continuing to improve bit by bit. So I guess there's potential that without Valentine, they could get to sort of a million ounces annual, 250,000 a quarter without Valentine, and then Valentine on top, you could be looking at 1,180,000, where I've put 1,125 in here. So, I mean, if you said like 150, as a sort of reasonable target, then it pushes the numbers up a little bit. Not, not huge. But yeah, you sort of have a play around with the numbers and sort of see what it gives you. So I've sort of modelled on the current gold price and then, various other figures, it dropping down to 3,000, which sort of gives you some very, very terrible figures at the bottom here. Sort of 4,000, 4,500, sort of potential range that we could be in for a little while, and the sort of stretch goal, if you like, because my options are January 2027, so all of next year. I guess there is potential to get to $5,000 gold, which throws up some striking numbers. But shouldn't get too carried away. I did put a 20 times multiple on that, sort of thinking that, you'll have Newmont and Agnico, Eagle, these sort of larger mines producing an enormous amount, and there would be sort of far more focus on the gold sector. So there's potential for 20 times earnings. That is obviously currently lower than the S&P, so I guess doesn't sound crazy. But for the most part, sort of talking about 20 times earnings for pretty much anything in the mining sector is, generally a little bit optimistic. So I think $5,000 gold, could potentially be at 20 times earnings, but maybe I should, drop that down a little bit. If you even called it 15 PE, still it's double, basically double over double the current price. I think they're at 14 currently. So yeah, $32 sort of enterprise value, with the debt coming off, I think is quite reasonable. I've also sort of taken cost of sales and sort of multiplied that out. I divided this by the current ounces produced and multiplied by, well, that should be 1,150,000, I suppose, to be fair. And then, yeah, they've got care and maintenance. So the Mexico Los Filos mine is under care and maintenance at the moment. I've assumed that carries on. Obviously, if that potentially comes back online, then we could get an enormous re-rating upwards and, an addition to this gold ounces mined, because, they sort of shuttered it and didn't agree to things when gold was at like 2,200 or something. Now at 4,250, maybe they sort of, walk back their their disagreement and open the mine again. Obviously, if the mine completely died, and they may sort of sell it off for, absolutely peanuts, or just sort of shut it down, then this care and maintenance would go. But I'm going to leave that here, just sort of assuming this argument rumbles along. Exploration and evaluation expense, I've sort of taken 4 times that plus 20%, just assuming I think they're already talking about exploration on Valentine as well for sort of phase 2, they're calling it. So yeah, maybe it would warrant a little bit more than that, but I've added 20%. Stock-based compensation, taken their current quarter, multiplied it up and added 20% for, again, Valentine, and I think they've got sort of most of their staff, in place sort of currently. So adding 20%, I think that should be somewhat reasonable. Could go up and down. Interest expense, they're sort of currently at net 47 million. I think that's 50 million of interest and 3 million of interest income. I have multiplied that up by 4 and then taken 20% off it, because obviously they're paying down an awful lot of debt with their cash at the moment. I think cash went up sort of 90 million in the last quarter. It was about 250 something, and debt come down. So yeah, projecting this interest expense, going forward long term, probably isn't the best idea, because that is going to come down, and potentially interest rates coming down as well. So yeah, there's potential for this to be even lower than it is currently. And if we're sort of talking about Valentine being, fully up and running, maybe we should have that interest expense down. But yeah, I've assumed some maybe optimistic projections for some of these numbers. I guess having a, pessimistic view on interest expense isn't so bad. Tax has been sort of all over the place, so I've sort of taken the same 30% that I had with the crypto miners, to be honest. But yeah, tax is sort of a little bit all over the place, really. They seem to, have their depreciation and things, and it sort of reduces net income, and they sort of they have deferred taxes and things. But I think assuming a sort of 30% over the long term seems okay. And yeah, so that gives you net profit, balance sheet, and debt. Well, cash on the balance sheet and total debt. Again, I've taken the full current value of debt as per the end of Q3. It's likely already less than that, but we'll leave it there. And then, yeah, once all of these mines are sort of basically up and running, they should be, well, they're already sort of showing decent profits. That's why the stock's gone from sort of $6 or so to 14. But yeah, I think continuing on that would be sort of should improve multiples. If we go down to $3,000, $3,500 gold, then yeah, it's going to look rough, and they might be sort of down to 8 times multiple again, sort of 4 to 4,500, sort of given 10 to 15, and then yeah, it's up to you whether you would give them a 15 or a 20 multiple for $5,000 gold or more. Maybe they should be at S&P levels if they're producing an enormous amount. What would that be? Net profit of 1.8 billion on 5.75. Yeah, assuming these sort of assumptions are reasonable. I mean, if we took the $4,500 gold, you're sort of looking at divided by 0.75. Yeah, 27% margins net. That is sort of Mag 7 level, sort of on average. And at $5,000 gold would be 31% over the magic 30%. Your Metas and Microsoft and people like that. You got your other Mag 7 like Apple and Tesla and people like that could only dream of 31% net profit, even though this is obviously cyclical. It's not going to be there every year like it is for Meta and Microsoft. So yeah, you don't give them as lofty a PE, but 15 PE for sort of 31% profit is possibly quite low. So maybe let's stick that back up to 20 and give ourselves a big lofty target. But I wouldn't be waiting for $40 plus to take profit on my options, certainly. But yeah, I thought that was a little interesting exercise to do and sort of see where they could potentially be after mines are up and running and things are resolved, debt starts coming down, and you can sort of see what could potentially happen next year. So as I say, not a huge amount else has happened. So, as I say, not a huge amount else has happened. I've been doing a little bit of adjusting on the options. I'm sort of trying to sell the this coming January Hive options for sort of anything I can, basically. And I need to sell the ones that are sort of close to profit as well. I've got some $10 January, which just isn't going to happen. They're at sort of 350 or whatever they're at. So yeah, I'm sort of taking the tax loss on those. Might as well sort of see if anybody will buy them rather than just let them expire. And yes, I did sell my Himax as well, which seems a bit of a bad decision. I didn't get too much for them. I think the stock was at $7.80, and it went up 10% yesterday. So yeah, would have been a little bit better off waiting, but it's this coming January for $10, and even with that gain, they're still only at $9. So it was just rapidly approaching. We won't get another earnings before the options expire because they don't report in January. So yeah, just didn't really see a particular catalyst for them to go above 10 in the next month, aside from a huge announcement, which you can't pin your hopes on. So yeah, I think in the data section I was showing a sort of £1,700 lost on those sort of current options, but that ignores the fact that I did sell about a fifth of them, sort of for I think 2 or 3, maybe even 3 times my original investment. So sort of left an enormous amount on the table, of course. Only selling a fifth, and now they're sort of largely worthless. But that's just the way things go. Still positive on them going forward. So I kept the stock, obviously not a huge amount of stock, but 10k position. And the ETFs haven't really moved all that much, to be honest. Even Bitcoin and Ethereum sort of doing okay, a little bit down. But yeah, sort of average cost £8.10. They're now at £6.68, and Ethereum very much similar. But I do like them being in the ISA, of course. So yeah, I shan't go through economic news. There wasn't really sort of all that much to see. Some PMIs and stuff, and yeah, non-manufacturing PMI, the sort of big bellwether, 52.6, pretty good. And yeah, the big PCE inflation, 2.8% instead of 2.9, which is pretty good. Looks like December rate cut is pretty much nailed on. That's next week. So yeah, we'll just see how the portfolio goes. So leave your thoughts in comments below and like and subscribe. See you soon.